Hello everyone and welcome back to The Pulse, where we take a closer look at what's happening across the real estate markets in Greater Vancouver and the Fraser Valley. I'm Susanna Gonsalves and I'm joined today by Brittany Reimer, and for this episode we also have a special guest.
That's right. Joining us today is Alan He, Director of Leasing with MLA Canada. Now, Alan oversees many of our projects, lease-ups across the region, and keeps a very close eye on how the rental market is going. So Alan, welcome to the show.
Awesome. Thanks, Britt. Happy to be here. It's been a really interesting start to the year for rentals, and I'm excited to be here to talk about it.
Yeah, great.
Yes, it is most definitely an interesting time, which is creating further uncertainty for buyers and the market overall. GDP in Q4 was down. Unemployment is still above 6%. We have volatile markets, particularly around oil and energy, given what's happening with the US and Iran. And we had a disappointing provincial budget release, which doesn't seem to have much in it to ignite the economy. And don't get me started on the current land right discussions. Therefore, we continue to see fewer projects move forward and sales volume still low overall, as it's really the opportunistic end users that are keeping sales going for the moment.
Yeah, exactly, Susan. Whether it's a budget or new housing policy announcements, construction costs, or simply just the change of delivering housing that people just actually can't afford, there's a lot shaping in the market right now, internationally, nationally, and definitely here at home in Metro Vancouver and Fraser Valley soils.
Yeah,
Where we are today.
Exactly. Now those opportunistic end users are looking to get more space or enter the market while they have choice, and they are the winners here. And that's why looking at what's actually launching, selling, and leasing on the ground can also be so helpful.
And speaking of which, today we're filming from Hillcrest in the Fraser Valley, Abbotsford, a newly completed rental building here in Abbotsford developed by Red Developments.
It's a great example of the kind of purpose-built rental housing we're seeing more of across the region. Thoughtful design homes in well-connected neighborhoods.
Yeah, now we'll take a closer look at Hillcrest later in the episode. But first, let's start with what's been happening in the pre-sale market over the past month. It was unfortunately another slow one. In February, we saw just 3 launches, all of which were townhome projects, bringing a total of 64 homes to market.
Yeah, that's a pretty big shift when you compare it to the historical average. Typically in February, we see around 9 project launch. So this is really only a third of what we would normally expect to see at this time.
Yeah, it's definitely a big difference. It's even more pronounced when you look at the number of units released.
Yeah, right. On average, February brings over 1,100 units to the market, largely because launches in the past were dominated by concrete and wood frame condo projects.
Yeah, but with the shift we've been seeing in the market lately, far fewer of those product types are moving forward. Hence the big gap between an 1,100 average unit count versus our 64 this past month.
Yeah, exactly. And initially we saw a slowdown primarily in the concrete condo launches, while some wood frame projects were still able to proceed. But over time, even wood frame developments have found it increasingly difficult to just find, a real true meaning to come to market right now.
Yeah, and as a result, the main product type we're seeing launch now are townhomes, which rely almost entirely on end users rather than investor demand.
Yeah, and we are seeing end users in the marketplace right now showing up on wood frame condo projects, townhomes, as you just shared, Sue. So they definitely exist. It's just a smaller pool of buyer, and many of them have to sell their existing properties to make that shift into that townhouse market. We don't see as many first-time buyers moving into that price threshold versus wood frame product.
Okay, so how are the townhomes doing in today's market? How many sales did we see there last month?
Yeah, sales were relatively low with 4 homes sold during the month, which translates to a same-month absorption rate of about 6%. Now that said, it's important to keep in mind that townhomes typically sit at a higher price point, and buyers in the segment are almost always end users, as Britt just talked about, and so they tend to take more time when making a purchasing decision. This is especially true in today's market, where we're seeing buyers return 4 to 6 times before they're ready to make a decision. So the deal volume in that initial month is going to be much lower than what we often see for condos, for example.
Yeah, and looking ahead to March, it seems we may be in for more of just the same old, same old.
Yes, and despite what we usually hear about the spring market picking up, it doesn't look like we're quite there yet this year. Is that right?
Yeah, not surprisingly, the only project we're currently anticipating to launch in March is another townhome development, bringing just 29 units to the market.
If our projection holds true, March would bring in about another 2% of the number of units that would typically launch during this time of the year.
2%.
These are
2% of what we're normally launching.
Much lower,
right?
Yikes.
Only 1%.
Yikes.
That is a stark contrast, and why we have been saying for a while now that eventually we will see a lack of supply once the current inventory is absorbed, because we just aren't seeing much new product being released. Case in point.
Yeah, many projects that were originally expected to launch in the fall of 2025 were pushed to spring 2026. But now that spring is actually here, it seems like a lot of those projects are still standing on the sidelines, a wait and see approach. I'm really just waiting for that right timing, unless you can phase it and you've got a strategy around hitting your pre-sale targets.
Yeah, unfortunately, the reality right now is that buyers still have a lot to choose from, which increases risk on these newer projects. So if the developer has the ability to hold off launching, many are choosing to wait for a stronger market with a bit more certainty of sales volume.
Yeah. And we talked about this, I think, a little bit last month. We are starting to see, Polygon's coming out with their Coquitlam project. They had success in Squamish. Some of the standing inventory is starting to get to close to completion now. And so, I would expect that some of those projects will see some sales, especially considering there's not going to be a lot of other competition that enters into the marketplace for spring.
On the
So-
pre-sale side,
so-
for sure.
So there's opportunity, right? There's definitely opportunity there. All right, so let's move into some resale stats. How was February in hindsight?
Yeah, well, at first glance, it might look like the numbers are encouraging. Sales were up 62% month over month in Greater Vancouver and 36% in the Fraser Valley.
There's a but. I sense a but here. There's definitely a ...
There is a but. While these gains sound positive in isolation, when you take a step back, the picture looks a bit different. Sales are still sitting 29% below the 10-year average in Greater Vancouver and 38% below in the Fraser Valley.
Right. And even when we compare this to the same time last year, sales are still trailing behind. So the recovery that many were originally hoping to see take shape in early 26 may be pushed back even further into the fall.
Yeah, right. And when sales are lagging, inventory usually starts to creep upward, which was essentially the defining theme of the market throughout 2025. So how's the inventory on the market right now?
Yeah, great question, Suze. Inventory levels are definitely still elevated. In Greater Vancouver, inventory is sitting at about 37% above the 10-year average for seasonal listings, while the Fraser Valley is even higher at roughly 51%.
Right. And that makes sense. So not only are we seeing lower than normal sales activity, but new listings have also remained relatively elevated. That said, while new listings are still above the 10-year average for the month, there has been a slight shift compared to last year. Both Greater Vancouver and the Fraser Valley saw about a 6 to 10% decrease in new listings compared to February of last year. In other words, we're adding inventory at a slower rate, which is a positive, but still overall not amazing.
No, and many sellers likely know that now is not the best time to sell unless they really need to, because they're looking to capitalize on their equity and turn it into a larger home maybe. As a result, some potential listings may be held back. We talked a few months ago about mortgage renewals as well. That is starting to happen, right, for 2021, which was a really big boom in our marketplace. So those are coming up for their 5-year renewals now. I suspect that, we're either going to see some listings come up because people want to get out of the market and maybe have a tough time renewing, or, it'd be really at the discretion of the appraisers out there when those refinances are starting to happen. So I feel like there'll be more on that over the next 3 to 4 months on the resale side.
Yeah, probably. Although good news is that rates have obviously come down a bit. So, if you were renewing when you sort of locked in at sort of the low point and you were having to come back and renew at the high point, that gap definitely had some cause for concern for us a while ago. Rates have kind of stabilized now and they're a little bit more palatable. I mean, there's definitely still going to be some big increases for people, but definitely a little less dire than it was maybe, a year and a half ago, a year ago when rates were a lot higher. So that's helpful.
Yeah. And I have heard appraisals have been pretty forgiving too. So maybe the combination of that leads to, a busier end of spring market.
Yeah, fair enough.
Yeah, Britt, that makes a lot of sense. So thinking about that a little bit more, how does that affect the prices overall, Suze?
Yeah, month over month prices have remained relatively stable, but when we look at the year over year change, we can see that prices have started to soften.
Yeah, and that trend is a bit more pronounced in the Fraser Valley over Greater Vancouver. In the Fraser Valley, prices have declined by close to 9% year over year, while Greater Vancouver has seen a slightly more moderate decline at around 6%.
Yeah, and that likely reflects how quickly the Fraser Valley market accelerated over the past few years. When markets rise that quickly, it's not unusual for the correction on the way down to be a bit more noticeable than an already well-established market like Greater Vancouver. So, that kind of tracks from what we've seen historically.
Yeah. All right, well, I think that's enough of resale. Shall we jump into our brand new rental pulse? Alan, you are the star of the show. This is exciting.
All right, I'm excited. Let's do this.
Yeah, let's dive in. Really excited to have Alan here, Director of Leasing at MLA Canada. Extensive experience in real estate. Alan specializes in project lease programs and is our go-to expert on all things rental.
Yeah, he absolutely is. And rental has been a hot topic. So, Alan, why don't you kick us off?
Well, thank you both for the warm welcome. I'm excited to be here and so much to talk about. So let's jump right into it, shall we?
Yeah, we love the energy. I mean, take it away. Like, we're just going to listen to you. What a treat for us.
All right, cool. Let's do this. Well, taking a look at the overall market, we tracked 7 new rental projects completion across Metro Vancouver in the month of February. The increase compared to the one project we recorded completing in January.
Yeah, that's quite a bit of new supply completing all at once. Now, how did that leasing activity compare to last month?
Yeah, while leasing activity increased month over month with 117 units leased in February compared to 100 in January, the overall absorption rate declined. January 76% absorption was elevated due to only one project completing that month, which had a long pre-leasing period. With more available inventory in February, the 117 lease translates to about 16% absorption rate, which is not unexpected given the typical seasonal market pattern.
Yeah, absolutely. Winter is usually slower time for leasing, but this year's mild weather has made renters open to moving over the holidays and into the New Year's, according to our leasing staff, which we typically don't see.
Yeah, with multiple buildings completing around the same time, demand gets spread across projects, each with its own kind of pre-listing schedule. So what types of projects did we see start move-ins last month?
Yeah, absolutely. Nearly all of them were wood frame buildings. 5 out of 7 completions, which continues to reflect the strong pipeline of mid-rise rental developments across the region. The remaining 2 projects were concrete, representing the larger, higher density rental product we tend to see in more urban areas.
Yeah, and geographically, where are most of these projects located, are we sort of finding?
Yeah, that's a really good question, Britt. The majority of completions were concentrated in the greater Vancouver area, accounting for 5 of the 7 completions. Now, these occurred in the New West, Vancouver West, North Vancouver, and Port Coquitlam is where they are, and the remaining 2 are located in Abbotsford and Langley.
Yeah, sounds like overall pretty active month for new supply, even if leasing activity takes a little longer to build momentum. Now, quick question for you. We talked about wood frame versus concrete. Do we recognize preferences in that product type? Do people prefer rental in concrete for purpose-built rental, or is it really not about the concrete versus wood frame, would you say?
I think it's a good question. I think right now, the reason why we see a lot more wood frame product coming online because the timeline to bring that project online is a little bit quicker. I think we all know in the last couple of years, a lot of developers shifting from maybe for market to the rental space, and this is the easiest to do that with the wood frame product versus concrete.
And would you say the wood frame's absorbing at a similar rate than the concrete stuff?
I think so. I think in the grand scheme of things, when you bring a concrete tower online, you have hundreds more units. In terms of the absorption of percentages, I think that percentage is pretty even across the board. Again, it comes down to incentives and pricing.
Yeah, of course. Always.
And Suze, additionally, as we've seen historically, leasing trends tend to accelerate once buildings are fully completed and renters can actually physically tour the units and see the homes. So it'll be interesting to see how absorption progress over the next few months within these buildings.
Yeah, so looking ahead, what are we expecting for rental completions for the month of March?
Yeah, we're expecting 4 projects to complete in March, adding approximately 379 completed rental units to the market. While it's a smaller wave of supply coming compared to the last month, February, it still represents a steady flow of new rental product coming to market across all the regions.
And where do we expect these to be located?
Yeah, most of these projects are still located in Vancouver West, with the only completing outside of it in that sub market is in Abbotsford. Interestingly enough, highlighting how strongly new rental supply kind of clustered in that city urban area.
Yeah, and speaking of which, we should probably take a closer look at Hillcrest, which is here in Abbotsford, our most recent lease-up project that we just started leasing on 30 days ago.
That's right, which is kind of very new to the scene. So be excited to tell you guys more about that.
Yeah, and as we teased earlier in the segment, this month's rental feature is Hillcrest by Red Developments right here in Abbotsford.
That's right. This project features a collection of design-led 1 to 2 bed and den rental homes. And as you can see right now, they're move-in ready.
Yeah, design-led. Can you tell us a bit more about what that means on these homes?
Yes, absolutely. These homes are designed by the award-winning House of Bond, showcasing elevated finishes, spacious layout, and oversized kitchens with large islands and an abundance of storage. The finishes and features are actually above what you'll normally find for some market homes in the area.
Yeah, these are beautifully designed and super functional, and it's true, it's rare to find rentals with this level of spec and attention to detail. In fact, I'm not sure outside of White Rock if I've actually seen Karen come south of the Fraser before. So to have it in rental spec like this is truly remarkable and such an added bonus for these tenants.
Totally, Britt, and that just speaks to the level of detail that Red Construction has paid into building this project. They really put their heart and love into this project, and you can really feel it sitting in this space.
Yeah, you would never know coming in here that this was a rental project necessarily. Like this absolutely rivals for market product that we've sold all over the Lower Mainland, including in Vancouver. So it's really well done.
It is. And when you think about the floor plans, like everything here is spacious. We have 1-bedroom homes that are like 800 square feet or just under 800 square feet. And so, compared to 450 square feet that we see for market, it's like truthfully double the size.
Yeah.
And you're not paying, anything more on the rental side. So there's really good value to being here in Abbotsford in this building.
Absolutely.
And Alan, what kind of amenities are they offering here at Hillcrest?
Yeah, the building offers a 900 square foot fitness center, an outdoor children's play area, secure underground parking, and EV charging stations. Plus, being centrally located on Hillcrest Avenue, tenants do have convenient access to shops, parks, transit, and all Abbotsford has to offer.
Yeah, it's true. With these spacious interiors, the amenities and central location are an added bonus. From the leasing team here, the kitchens have been the real highlight for tenants, with positive feedback on the oversized islands and that there's plenty of storage. I do have to say the large patios and balconies stood out to me as well. And with pet-friendly policy, it's easy to see why tenants are drawn to these homes.
Yeah, absolutely. And the reputation of Red Development only adds to the appeal. Known for delivering high quality homes and recognized with nominations from Haven and Georgie Awards of past projects.
So how does one learn more? How do we get people here? If they're interested, what do they do?
Yes, that's the most important part. This project is now renting. You can register online and learn more about these move-in ready homes at hillcrestliving.ca.
All right. Thanks so much, Alan. And as we did last month, let's take a look at both purpose-built rental apartments and investor-owned rental condos that have completed within the last 5 years. Now, Alan, what can you tell us about the average rents across the major markets for the month of February?
Absolutely. In February, the overall average rent came in at $2,670, with average rents remaining at about $4 per square foot, the same as last month across these markets. Now, there was a slight month-over-month decline over nearly about 2% average in rent.
Yeah, downtown Vancouver continues to command the highest rents. Meanwhile, Surrey's average rent remains lower than Langley's, even though its average rent per square foot is higher, a difference of about 55 cents per square foot.
That's right, Suze. Average unit size tend to be smaller in Surrey, which pushes rental price per square foot a little bit higher. So while the overall price point in Langley might be higher, renters are typically getting more space and lower price per square foot compared to units in Surrey, particularly compared to Surrey City Centre, where there's more compact high-rise product.
Yes, and with Langley sitting at just under $3 for price per square foot, it's closer to value to Abbotsford's average of $2.57 price per square foot than it is to Surrey's. Now, Abbotsford has the lowest average rents among these markets, coming in at $1,930 a month.
Yeah, tenants are prioritizing affordability right now and are taking advantage of new incentives and competitive pricing. If they can move to a new rental development and save $200 or $300 a month, many feels it's worth it to make that move.
Yeah, no, it makes sense.
Yeah. And we're also seeing renters becoming more flexible with location, willing to move to a different market if it means significantly lowering their monthly cost.
Yeah, now speaking of shifts in the rental rates, where did we land in February?
Yeah, average rents continue to trend downwards, unfortunately, over both these last 3 and 6 month periods across most markets. Rents are down about 3.6% over the past 3 months and nearly 4% over the last 6 months, suggesting a gradual softening as more rental supply coming to market.
Yeah, and although declines aren't dramatic, they do suggest the market is gradually softening as new rental supply comes online and competition between buildings really starts to increase. Now, Alan, in which markets have we seen the sharpest declines?
Some markets are adjusting more sharply than others for sure. Coquitlam in particular is seeing a significant softening in rents over the past few months, same as Richmond and Burnaby, likely influenced by a combination of increased rental supply and tenants becoming more selective. For that reason, I expect we'll see the west side of Vancouver soften a bit more with the added completions that's up and coming.
Yeah, absolutely. No surprise. Tenants are shopping around and they're benefiting from the newer competitively priced options that they have now just entering into the market in 2026 here. They do have a preference for newly completed product. We're finding as price points decrease and their budget allows, there's also more incentives and developers a lot more motivated to, lease at velocity versus the mom pa one-off rental.
Yeah, absolutely.
Who doesn't like new stuff, right? New product.
Absolutely.
Now that wraps up The Pulse. Be sure to hit subscribe so you don't miss the next episode. And if you haven't already, be sure to check out our newswire, a daily email roundup of all the breaking news in the world of real estate. Alan, thank you for being here.
Yeah, thank you so much, Alan, for gracing us with your presence on this month's Pulse. Your knowledge of the rental market is obviously just so obvious. And so thank you so much for joining us.
Well, thank you for having me. This is fun, and hopefully see us next month.
If you make the cut.
If I-
We'll see. We'll see.
We'll see.